Yeah, hello. See, whenever we are finalizing the financial statements, by finalizing the financial statements, I mean that the year has, let's say, come to an end. You are preparing your P&L, you are preparing your balance sheet. Whenever you are preparing your financial statements, you can simply not finalize it till you have not made some accounting estimates. Without accounting estimates, it is simply not possible to complete the financial statements. I'll take a simple example of an accounting estimate. Let us say for depreciation. Yes, one word of caution. Depreciation has nothing to do with accounting standard 29. I'm just using depreciation as an example to bring about the importance of an accounting estimate. What I was just trying to suggest is that when we finalize our financial statements, we need to make some accounting estimates. There are certain things for which there is not much clarity. Some assumptions have to be made, and on the basis of that only we can finalize our books. For example, in case of depreciation, let us say today you are buying a new asset. Now what will be its useful economic life? This you will come to know. A definite answer will be available only in the future. So as of today, what you will do is you will do some kind of a guesswork. For example, based on your past experience, you might be able to say, for example, let's say a similar kind of machine is purchased again. Based on your past experience, you will be able to estimate what will be its useful life. Similarly, at the end of the useful life, at what amount can I sell it, which we call as the salvage value or the residual value, that also will turn out to be an estimate. So, till I do not make an assumption that what will be my useful economic life, till I do not estimate what will be its salvage value, I will not be able to provide for the depreciation. All the answers will be available but in the future. In future, I will come to know what is its actual useful life. In future, I will come to know that what is the actual residual value. But I can't wait till those final answers or till those accurate figures are available, because these figures will be available accurately in the future while the accounts are to be finalized right now. And that is the reason we make estimates, and on the basis of estimates, we finalize our books. So that is what we are going to do even in this particular accounting standard. Right, there are certain estimates that have to be made, and on the basis of those estimates, we are supposed to finalize our books. So, think about something in this way. Let us say there is a company which is selling on warranty basis. Let us say you are manufacturing, let's say, a certain commodity and you are selling that particular commodity. Let us say it is some electronic equipment which you are selling in the market on warranty basis. You are giving a warranty of 3 years, let's say. So any customer who is buying this product from you, you are telling that customer that, see, in the next 3 years, if this product develops any manufacturing defect, then we are ready to make good that particular repair at our own cost. So let us say you are selling a particular product, the product is developing some manufacturing defect, I can return that product back to the manufacturer. The manufacturer will incur the repair expenses, will repair that particular product and give it back to me. If the manufacturing defect is very severe, quite possible that the manufacturer may even replace that product and give me a new product. So you are selling on warranty basis. Now, what percentage of your products will become defective? What will be the amount of products that will be returned back? What will be the amount of repair expense that I'll have to incur? All these answers will be available in future. But I cannot finalize my books till I have not recognized some provision with respect to the same. That's what I was saying earlier, isn't it? An accounting estimate will be required, and only on the basis of the accounting estimate, I'll be able to complete, or rather, I'll be able to finalize my books. Or let us take another example. Let us say some employee of yours, or maybe some dissatisfied customer of yours has dragged you to the court. Let's say in the consumer court, some case is going against you. Now, as on the balance sheet date, the verdict or the judgment of the court is still awaited. Our lawyers are advising us that, see, be mentally prepared, you are definitely going to lose this particular case. Very high chance that you will lose this particular case. And you will have to pay some amount of damages to your employee, or maybe some amount of damages to our dissatisfied customer. So we know, right? We know that some amount is required to be paid. How much? That I will come to know only when the final judgment will be out. When will the judgment be out? In future. But I am finalizing my books as on today. So till I do not recognize some provision for the damages which are payable, I cannot finalize my accounts. And since I cannot finalize my accounts, till I don't make some accounting estimate, that's what I was saying, that till I don't make that accounting estimate, finalization of books will simply not be possible. So these kinds of accounting estimates that you are recognizing in your books are actually a liability. This is a liability which requires substantial degree of estimation. A liability that requires substantial degree of estimation, that is what we are calling as a provision. And how should the provisions be recognized in our books? That is the subject matter of Accounting Standard 29. So AS 29, as you can observe the title, Provisions, Contingent Liabilities and Contingent Assets. So it is basically covering three things over here. A provision that we will be discussing first, then contingent liabilities, and then contingent assets. Returning back to the provision, as I was suggesting even earlier also, in very simple language, it is nothing but an accounting estimate, in very simple language. But if you look into Accounting Standard 29, and if we introduce ourselves to the technical jargon that is used in Accounting Standard 29, they are saying provision is a liability. Provision is a liability which requires substantial degree of estimation. So I have to apply my judgment. As I said, when you say that the substantial degree of estimation will be required, then how will I estimate it? I'll have to apply my judgment. If this is a transaction which has happened already in the past, then perhaps my estimation will be near to accurate. But if it is something new, then yes, it's quite possible that it might be guesswork on my part, but some degree of estimation will be required, and on the basis of that, I will come to the final figure of provision, and then I will recognize the provision in my books. Extending the same examples that we had taken earlier, you are selling on warranty basis. But you know what? You are doing this since last many years. You are in this business since last 15-20 years. And you know very well that it is only 1% of your total products which go defective. So I have a percentage in my mind. Based on my past experience, I know that whenever that product is written back, 75% of the goods require minor repairs. 25% requires major repairs. So I have quite a few inputs available. I can use these inputs, and on the basis of that, I can find out what will be the amount of provision that is required. So what I can do is, the total number of units that I have sold in a particular year, I can multiply that by 1% because I expect 1% to go defective. Then that number of products I can multiply by 75% into the minor repair amount which is required. Total number of units manufactured into 1% into 25%, and that I can multiply by the major repairs which are required. What is this amount? And finally I'll get a fair amount which can be recognized by me. That is what will become a provision that I'll be recognizing. Or that verdict which is still lying pending in the court, isn't it? I may ask my lawyer that how much damages will I have to pay. Let us say similar kind of cases have already happened in the past, and on the basis of that the lawyers are able to advise me that see, this is the amount that you may have to pay. Then for that amount I'll recognize a provision. So some degree of estimation will be required, and on the basis of that I'll come up with the amount of provision to be recognized. This does not mean that the provisions will always be recognized. There are three conditions which have to be fulfilled, and on the basis of that you can recognize the provision. In accounts we are having a very old principle. It is known as the principle of conservatism. What we do in the principle of conservatism is that if you are expecting any loss in future, we go ahead and recognize a provision for the same. We say it is contingency, and those contingencies have to be provided for. This is something which was there even in Accounting Standard 4. Under AS4 also we are having contingencies, and it's a very old understanding. I'm quite confident that when you got introduced to accounts, let us say in the 11th grade, when you are introduced to accounts, our accounts teacher has always mentioned this thing. Ignore future probable gains, do provide for future probable losses. So this is something that has been suggested by our accounts teacher since long. Now, when I apply Accounting Standard 29, it is not so simple to recognize a provision. If you are of the view that there will be some loss in future, so let me go ahead and recognize a provision for the same, it will not be possible if you are following this accounting standard. A provision can be recognized agreed, but only if all the three conditions are fulfilled. If I fulfill all the three conditions, then and only a provision can be recognized. So it's not as simple as this, that I feel that okay, I will suffer this loss in future, okay, let me make a provision for it. It's not going to be as simple as that. If you are of the view that you will suffer some loss in future, you can recognize a provision provided these three conditions are getting satisfied. So let's analyze these three conditions. Let's try to understand when exactly can a provision be recognized. Condition first, as you can observe, an entity has a present obligation arising out of a past event. Present obligation arising out of a past event. Right, I'll have to understand these terms. Present obligation, past event. Past event, something has happened in the past because of which there is an obligation. It should not happen that something is going to happen in future and you want to provide it right now. What was that principle of conservatism? Make a provision for future expected losses. No. If you are expecting a loss in future because of some development in future, I cannot recognize a provision. A provision can be recognized only if some obligating event has occurred, and it must have occurred in the past. It is not something that I am expecting to occur in future. That's not possible. It has to be something which has happened in the past. So something has happened in the past because of which you have a present obligation. How can I understand present obligation? Simple. By present obligation we mean as on balance sheet date. This is the easiest way of understanding what do we mean by present obligation. So the question that you should ask yourself is, has something happened in the past? Let's say the answer is yes. And because of that, do you have an obligation as on the balance sheet date? See, after all, I am preparing my financial statements. I am finalizing my balance sheet as on a particular date or for a particular period. So that period has come to an end. And on that particular date, do I have an obligation? If you come to the conclusion that as on the balance sheet date you have an obligation, we can consider that as a present obligation. For example, that earlier illustration that we were considering, you have sold on warranty basis. So tell me, what is the past event? The past event is that you have sold on warranty basis. So because you have sold on warranty basis, as on the balance sheet date, you have an obligation. If any of those products are returned back, see, product will be returned back in the future year. Agreed, product will be returned back on the future year. But as on the balance sheet date, I know that for all the units that I have sold on warranty basis during the year, some percentage of that may become defective. As on the balance sheet date, I know that some of those products will be returned back. As on the balance sheet date, I know that I'll have to incur some minor repairs or maybe some major repairs. So the event is that I have sold it on warranty basis in the past, and because of that, I know on the balance sheet date that I will have to repair that if any of those products are returned back. In other words, as on the balance sheet date, I do have an obligation. That's what we mean by a present obligation over here. So present obligation means an obligation which is there as on the balance sheet date. Whenever you are preparing or whenever you are finalizing your books, on that particular date, you must have an obligation. And again, I'll repeat, not for something that will happen in future, but something that has already happened in the past. Second condition. The second condition is, it is probable that an outflow of resources will be required to settle the obligation. Right, I'm just skipping this sentence for the moment. I'm saying it is probable that an outflow of resources will be required to settle the obligation, isn't it? So as you can see, again the same example, if I can just extend it even over here, once those products develop manufacturing defect, it will be returned back to you. When it will be returned back to you, you'll have to incur minor repair expenses, you'll have to incur maybe major repair expenses. When you will incur those expenses, tell me, when you will incur those expenses, there shall be an outflow of resources. Yes or no? Right. There's going to be an outflow of resources. And that is the reason one can say that the second condition is also getting fulfilled. So to settle that obligation, I'll have to incur the repair expenses. But, an important word is used over here. They are saying it is probable. Question is, what do we mean by the word probable? Okay. AS29, as I said, technical jargon. AS29 says that the word probable means more likely than unlikely. Okay, what they are saying is, I'll just write it over here. They say by the word probable, right? By the word probable, they mean more likely than unlikely. To be very honest, when we do a first reading of this particular term, it simply does not help. When you say that it is more likely than unlikely, we are actually even more confused that what does this really mean. So let us convert this into a mathematical model or maybe a statistical model. Let us convert that into something like a probability. So what it means is that the probability, Pi, I'm mentioning that as probability is greater than 0.5. Or in simple language, we can say that the chance of outflow of resources is more than 50%. If it is more than 50%, then the second condition is getting satisfied. In our example, it is definitely going to get satisfied. We are selling on warranty basis. We are ourselves very clear that 1% of your products are normally becoming defective. So that product will be returned back. And when that product will be returned back, I will have to incur the minor repair expenses or the major repair expenses. And that is the reason the second condition, along with the word probable, will get satisfied. Because I know, let's say for example, I know that 1% of my products normally become defective. So I know that the product will be returned back. I know that there is going to be an outflow of resources in form of repair expenses. And that is the reason one can say with confidence that the probability or the chances of incurring the repair expenses are more than 50%. And because it's more than 50%, the second condition is getting satisfied. Let's take that another example that we had taken earlier. A customer of yours has filed a case against you, and our lawyers are advising us that be mentally prepared. You will have to pay some damages to this client or some damages to this customer. Just see, the word probable will play into over here. The moment the lawyers tell us that be mentally prepared, you will have to make some payment by way of damages, isn't it? The chances of the outflow of resources are more than 50%. And because it's more than 50%, I'll go ahead and recognize a provision. Yes, we also have this term embodying economic benefits. Now, what exactly does that mean? Now, see, it is not necessary that outflow of resources should be always in cash. The outflow of resources may take form of some other possibilities too. For example, there are certain stores which may not give you cash in return, but it may give you vouchers, and these vouchers can be encashed. So outflow of resources is not necessarily only in form of cash. It can also be in kind. Ultimately, it works as cash only, but it can also be in kind. For example, let us say you are returning some product back to a retail store. The retail store does not give you cash back. Instead, is giving you a voucher. Tells you that this voucher can be encashed at any time. So the next time when you are doing any shopping, you can then share the code of the voucher, and as per the code of the voucher, so and so amount will be deducted from your total invoice. Now that is also one form of outflow of resources only. So it can be some outflow of resources embodying some kind of economic benefit. Most of the times the economic benefit will be in form of cash only, but it can also be something which is not exactly cash right now, but will operate like cash in future. So that's what we can say by embodying the economic benefits. So as we are understanding the word probable, right, we will say it is more than 50%. So the chances of occurrence of the outflow of resources is more than 50%. Then second condition also gets fulfilled. Finally, the third and the last condition. See, when it comes to accounts, everything boils down to an accounting entry. And if you want to record an accounting entry, you require an amount. If I cannot estimate the amount, I cannot record the accounting entry. For example, I am selling on warranty basis, but I don't know what percentage of the product will go defective. I can't put that percentage. I know minor repairs will be required, but I don't know how much. I know major repairs will be required, but I don't know how much. If you cannot reliably estimate the amount, how will you record the accounting entry? So since you will fail to record the accounting entry, in absence of amount, I cannot recognize a provision. So if you want to recognize a provision, then all these three conditions have to get fulfilled. Very quickly, we will just run through the three conditions. An entity must have a present obligation arising out of a past event, right? Past event, something has happened in the past, and because of that, as on the balance sheet date, you have an obligation. Second, it should be probable that an outflow of resources and onboarding economic benefits will be required. Important word over here is probable. Probable, more than 50% chance. In probability analysis, more than 0.5. Right? And finally, I should be able to estimate the amount reliably, because till I do not estimate it reliably, I cannot recognize the provision. One more thing. It's quite possible that all the three conditions are getting fulfilled, still I may not recognize a provision. Why? If something of this thing is there is some future action available by which I can avoid the obligation. If some future action is available by which you can avoid the obligation, then no need to recognize the provision. So whenever you are recognizing the provision, after all the three conditions are fulfilled, ask yourself, is there any way by which I can avoid the obligation in future? Do I have some action available in future by which I can avoid it? If your answer is yes, then no need to recognize the provision. For example, we are selling on warranty basis. So, I think in this way, that now I will stop selling on warranty basis. I just withdraw that entire scheme. I tell my clients no warranty, sorry. Fine. That means you are now not going to sell on warranty basis anymore. Question is, does the withdrawal of selling on warranty basis help me in avoiding the obligation? If you analyze it, you will realize that the answer will be no. Once you stop selling on warranty basis, you will not have any obligation but for future sales. What about the sales that you have already done in the past? The sales that you have already done in the past, you have already promised your customers that, see, I am selling on 3-year warranty basis. So even the future action of withdrawing your policy of selling on warranty basis cannot help you in avoiding the warranty expenses that you may have to incur for the sales that you have already done in the past. So no future action is available. I still have to go ahead and recognize a provision. Or that other example that we had taken where some matter is pending in the courts. Is any future action available by which I can avoid it? You may say we can go for outside the court settlement. Fine, you may go for outside the court settlement. Still, some amount of damages will be required to be paid. I cannot tell my client that or my customer that let us settle this outside, but I will not pay you anything. Why will that client agree for the same? So again, there is no action available by which I can avoid that particular obligation. And that is the reason I'll have to go ahead and recognize a provision. So whenever you are recognizing a provision, first see whether all the three conditions are getting satisfied. Once you come to the conclusion that yes, all the three conditions are getting satisfied, then again ask yourself, see, one more check, okay? Again ask yourself, is some action available in future by which I can avoid the obligation? And if your answer is yes, then do not recognize the provision. And if you come to the conclusion that irrespective of what you do in future, you cannot avoid the obligation arising on account of something already happened in the past, go ahead and recognize the provision. Think in this way. Let us say on the last week of March, let's consider the financial year as our accounting year. In the last week of March, one of your machine got physically damaged, and now certain repairs are required to be done so that you can utilize that particular machine. As on the balance sheet date, you have still not incurred any repair expenses for that machine. Let me see whether these three conditions are getting satisfied or not. Condition A, I am looking for a past event. What's my past event? My machine got physically damaged, and because of that, I'll have to repair it. So as on the balance sheet date, I have an obligation of repairing that particular machine. Okay. Will the repair expenses result into an outflow of resources? The answer is yes. And can I estimate the amount of repairs? The answer is yes. I can always call an engineer, and the engineer can tell me that this is the amount of repair which will be required. So as you can observe, all the three conditions are getting satisfied. Finally, I'll ask myself, is there any future action available by which I can avoid the repair expenses of the physically damaged machine? Is it possible to avoid that particular expense by some future action? Think of yourself. Is some action available? Is some future action available by which I can avoid the repair expenses of my damaged machine? Think of it. What do you say? If you'll analyze it properly, you will realize that a future action is available. You know what's the future action available? I can always buy a new machine. And after buying a new machine, I don't have to incur the repair expenses of the old machine. For example, that machine is severely damaged. I call up an engineer. The engineer tells me that a lakh of rupees will be required to repair this particular machine. And if you spend 1,50,000, a new machine will be available. So, I'll do cost-benefit analysis. I'll think in this way, that why should I incur a lakh of rupees in an old machine when I pay some 50,000 extra and a brand new machine will be available. So it's quite possible that I can avoid the obligation of repairing that machine by buying a new machine. You get it? So a future action is available by which I can avoid that particular obligation. So what I'll do is, I'll not recognize any provision for the repair expenses for the old damaged machine, because a future action is available by which I can avoid the same. So whenever there is any question or maybe a situation in real life when you are finalizing the books, you have to check for these three conditions. Once the three conditions are fulfilled, filter it through the future action available criteria also. And once you conclude that no action is available by which the obligation can be avoided, please go ahead and recognize a provision. One more thing. It is not necessary that a provision will arise only because it is required by some statute, or it is required by some contract, or it is required by some legal guidelines. Not necessary. For example, we have to pay the income tax on time, advance taxes for example. You are supposed to pay the GST on time. This is all obligations arising statutorily. Or you may have some contracts which is giving rise to obligations. Or there are some court directives, High Court directives, Supreme Court directives, because of which we may have to pay some damages. So this is an obligation that is arising legally. Not necessary. That only when there is a statutory requirement, only when there is a legal requirement, or only when there is a contractual requirement, that I will recognize an obligation. No such thing is there. An obligation may arise even out of a normal business practice, if that business practice is generally known. Even that can also result into an obligation. For example, when you are buying some product, let us say from Pantaloons or from Central, let us say, and then invoice will be issued to you. If you see at the backside of the invoice, many times the return policy of the store is mentioned. When we read that return policy, they will say that any product that you have purchased, within 7 days it can be exchanged for some another product. Or if you are dissatisfied, then a refund will be provided to you. Right? So something like that is mentioned. Yes, along with that, they will also give the negative list that so-and-so items if you are purchasing, then forget about replacement. So basically what has happened at the back of the invoices, you are coming to know what is the normal business practice of that particular store. And this normal business practice is also giving rise to an obligation. Statutorily required, they are not bound to replace that product. Contractually also, right, when we are buying products, we are not really entering into contracts with that store. And similarly, it is perhaps not legally required. But as I said, it is a normal business practice. It's a business practice known for everyone. So many times we do this, isn't it? We go to a particular store. Let us say you want to gift something to someone. Let us say you want to buy a t-shirt or maybe a dress and you want to gift it to someone. But then there is always this thing at the back of our mind, that what if the size does not fit? What if the other person for whom you are gifting it does not like that particular product? So we always ask that salesperson, isn't it, that if I'm buying it, can I exchange it? And the business, as I said, the business policy is very clear. That sales guy or that girl will herself or himself say that yes, if you are bringing this product within 7 days, then we are ready to exchange it. So as you can see, it is a practice which has been established by that store. So on the strength of that, I am buying this particular product. But as far as the company is considered, by chance if this sale has happened on 31st March, let us say on 31st March you have purchased a product from the store and the store has a business practice of replacing it or exchanging it, then that store has a past event that it has already sold that product. It also has a present obligation because you have already promised to your customer that you bring that product within 7 days, we are ready to exchange it. We are ready to replace it, or we are even ready to refund it. Not necessarily in cash, but some voucher may be given to you, which you can encash at a later on shopping. So it makes it very clear that a business practice can also give rise to an obligation. So statutorily, maybe I am not bound to do it so, but I have a business practice, and because of that, I may still have to recognize a provision. Similarly, a provision may be also necessary because you have a desire to maintain good business relations. Okay, you have a desire to maintain good business relations, and that is the reason it may give rise to a provision. For example, let us say you are buying from a local store. You buy some products from a local store, you come back home and now you are emptying those contents, let us say in your jars and bottles, and before that you are looking at the package of every product. And let us say you pick up one particular product and you look at the package now and you realize that it has already passed the expiry date. You know, let us say you are buying in the last week of March and you are just looking at it, right? Let us say in the last week of February itself, the expiration date has passed. So what shall you do? You will take this product back to that local store and you will show to that person that, see, I have purchased this and the expiry date has already passed and you are asking for a replacement. Now, what will be the reaction of that local store owner? Will he or she go for a replacement or tell you bluntly, sorry, it's not possible. You should have checked it before you left my premises, isn't it? But since you have not checked it, now I will not replace it. Tell me, what exactly is going to happen? What does your past experience show? You buy from this particular local store since last many years, right? You know this particular person also since last many years. That person also knows that you are a very regular client of his or hers. And now this kind of a thing has happened. Tell me, what do you really think? Even if such a thing has not happened to you, but just visualize for a moment that if such a thing happens with you, you have purchased certain product, you are a bit dissatisfied with it, or as I said, the expiry date has already passed, so you are asking for a replacement. Tell me, what do you feel? What will that local store owner do? Tell you bluntly that this is not possible, please go, or will that person replace it? Perhaps even apologize to you that I'm really sorry, I should have actually checked this myself, I'm really sorry that you have to again come back to my store. What do you really feel is the most likely reaction? Think of it. What do you really feel? Don't you feel that that local store owner will help you replace that particular product? And if, let's say, replacement is not possible, then provide you a refund for the same? Don't you really feel so? Why is the local store owner doing this? Because the local store owner has a desire to maintain good business relations with you, isn't it? So that is the reason. The local owner does not want to tell you bluntly that go away, because saying go away to you means losing this client forever. Not only that, if this is the kind of reaction that you get, what will you do now? You in turn will tell this thing to your friends. You in turn will tell this to your neighbors, isn't it? That don't go to that store. This is what that person did to me. So this is what you are going to tell everyone. And not only you, that particular store might lose in even some more clients too. So since that store owner wants to maintain good business relations to you, although not legally required to do so, although not contractually required to do so, although not statutorily required to do so, will still provide you with the refund. So as you can see, an obligation will arise also because you have a desire to maintain good business relations. Moreover, an obligation may also arise because someone wants to act in a fair and equitable manner. Fair and equitable manner. For example, let us say there is a factory, and in that factory, unfortunately, some accident occurs, and because of that, one particular worker is seriously injured. So immediately that person is rushed to the hospital, and the hospital is now providing the necessary care to that particular worker. The factory owner feels that this is something that happened during the factory hours. This is an accident that has occurred during the factory hours, and hence the factory owner announces that whatever are the hospitalization expenses that will be borne by the owner. You know why? Because you want to act in a fair and equitable manner. You want to be impartial. You personally feel that no, this is something that has happened during the factory hours, so it is me who should be incurring, or rather I'll say bearing that particular expense. This announcement of yours that I will bear an expense, that itself will give rise to an obligation. You are not legally, again I am saying, you are not legally perhaps required to do it so, perhaps not even statutorily, perhaps not even contractually, but you have a desire to act in a fair and equitable manner, and that also can give rise to obligations. So whenever you are deciding that whether a provision is to be recognized or not, do not filter it through narrow prisms of, let us say, whether it's legally required or not. You are like, okay, legally it is not required, statutorily not required, contractually not required, so no need to recognize a provision. No. Business practices also can give rise to provisions. Your desire to maintain good business relations can also give rise to provisions. Similarly, yes, your desire to act in a fair and equitable manner can also result into obligations. And yes, if these obligations are then fulfilling these three conditions, please go ahead and recognize a provision for the same.